Hi, and welcome to Sampford Advisors Software and Internet Monthly Report for December 2023. As usual, we're going to review the previous month's M&A and venture capital activity across the entire software landscape. So let's dive in on the M&A front for the last time in 2023. In December, we saw $4.4 billion invested across 63 transactions at a median revenue multiple of 2.2 times. The majority of the dollars invested came from the Thales Group $3.6 billion acquisition of Imperva. The final month of the year saw a decline in total transactions to 63, which is common as buyers and sellers typically slow down around the holidays. Finally, the notable month-over-month decline in median revenue multiples from 5.7 times in November to 2.2 times in December is really driven by the fact that only a handful of deals had disclosed multiples this month, so the data wasn't perfect. Moving on to annual deal volume and dollars invested, it is pretty clear that 2023 was a bad year for M&A. The modest decline of 12% in dollars transacted is a bit misleading, considering it is bolstered by $144 billion from the VMware and Activision Blizzard transaction, which accounted for just under 50% of the total deal volume. Without that blockbuster deal, we would be much closer to pandemic levels of dollars transacted. The 28% decline in deal volume, however, compared to 2022, is a far better indication of what was a lackluster year for M&A. Compared to 2022, the split between private equity and strategic buyers remained mostly consistent year over year, as both buyer segments grappled with macroeconomic uncertainty and higher costs of capital. Throughout 2023, the median revenue multiple and interquartile range remained fairly consistent, especially compared to the pandemic boom, which exhibited large swings in both median and quartile spreads. The stark contrast can be attributed to a much healthier supply and demand dynamic during 2021 and 2022, as opposed to the general lack of quality assets being sold in 2023 that created increased competition and kept valuations artificially high to some extent. Despite having fluctuated throughout the year, SaaS multiples maintained their edge over non-SaaS multiples in 2023. The SaaS premium has been consistently narrowing since 2021 and can be attributable to the tightening of interest rates that result in lower valuations for companies such as SaaS firms that have a longer horizon until they reach profitability. December marks a 24-month low in terms of transaction volume and has fallen well below the LTM average of 89 transactions. Although some of the drop is tied to the slowdown typically observed around the holidays, it also indicates investors remain cautious heading into 2024. We do not expect to see a material rebound until the second half of 2024 once some of the current macroeconomic tailwinds crystallize. Now, moving on to venture capital, the $3.4 billion invested with a median deal size of $4.1 million in December was consistent with the level of deal activity in November. However, there was a significant drop from 393 to 322 transactions in the last month of the year. In December, the largest financing was done by Shield AI, who raised $500 million in a deal led by Riot Ventures and U.S. Innovative Technology Fund. This capital raise is one of the many in the AI space that was completed in 2023. So despite the general risk-off appetite, investors were eager to finance AI and other sectors with increased appetite. As with M&A deal activity, the VC deal count in December 2023 marks a 24-month low and has fallen well below the LTM average of 390 transactions. Moving on to annual statistics, we see that annual deal volume fell 22% to 6,887 transactions, while annual dollars invested declined 28% to $70 billion. Despite the large year-over-year decline, 2023 is materially higher than any year prior to 2021, indicating that the pandemic surge in VC investment still had lingering effects in 2023 and will likely continue to sustain a higher baseline level of investment than what was experienced prior to the pandemic. Lastly, December venture capital valuations have remained mostly consistent compared to November, with each of the early, mid, and late stage multiples closing out the year below 2022 levels. As noted last month, despite the decline, VC valuations are mostly above pre-pandemic levels, further reinforcing the observation that the pandemic has expanded the VC landscape. Well, that's a wrap for this month's Software and Internet Report. As always, thank you for listening. We look forward to seeing you next month.